Hello traders, today is the 1st of March. My name is Neville Hornsey, market analyst YouTrading, and today I'll be looking at the Aussie yen. Okay, so we're going to start with the Forex heat map on YouTrading.com. We can see that the yen here is one of the strongest currencies. The Australian dollar looks like it is the strongest currency. If we're talking risk on, risk off, we normally like to see the yen and the Swiss franc doing exactly the same thing, but at the moment the opposite. So we're seeing flows out of Europe, out of Swiss franc, into the Australian dollar, into the yen, and also into the CAD. So at the moment, Forex heat map's not really giving us much of an indication of risk on, risk off. It's very mixed. Looking at the sort of Reuters news, we can see here that fears of civilians as huge Russian column bears down on Kyiv. So there's obviously going to be lots more headline risk news coming out, which will see flows go into the yen and quite possibly into the Swiss franc. Looking at the active trader platform, if I go to a daily chart, looking at the Australian dollar versus the yen, we can see here that bullish momentum is sort of increasing. We've got the 20, the 50, and the 200 EMA all stacked bullishly. So since the 15th of Feb, so the middle of February, we had that crossover, and prices are maintained above the 83 level for several days now. If we look to the sentiment indicator on the left-hand side, 84% of traders on this platform are trying to short the Australian dollar versus the yen as it gets to the upper range of this trading range here. So got the trading range from the 5th of January all the way down to the lows here, 28th of January. So we've got this trading range. Price action is still within this trading range from the 3rd of December to the 6th of January. And then if we look to the left, price action is still within this trading range from the 19th of October 2021 to the bottom of early December. So until we get above the highs of October or below the lows of December, we are basically in the middle of a range. So trading is quite difficult. So going with the momentum, going against retail trader sentiment is probably the easiest way for now. Targeting swing highs, so liquidity above 84.50 would probably be good. And when we get into it, we'll sort of bet, drill down onto sort of tighter ranges. So overnight, we had the RBA statement and rate decision. RBA kept rates at 0.1%, so 10 basis points. Their statement basically said the global economy has continued to recover from the pandemic. However, the war in Ukraine is a major new source of uncertainty. So we're going to start to see that central banks be looking to see what's happening with the Russian central bank, how they're having to react to these sanctions. Other central banks will have to make sure there's no knock-on effects from that. They'll have to take a more cautious stance. And if we look to the FOMC watch tool from the CME Fed watch tool, we can see that in March, there's still a 97.3% chance that the market thinks there's going to be a 25 basis points at least rate hike, and the diminishing, more aggressive rate hikes, if you see here, every hour seems to be getting less and less. So in 15 days time, we'll know for sure, but the market is pricing in just a 25 basis point rate hike in March. And then again in May, there'll be another rate hike, most probably, which will then lead on for a rate hike every meeting up until July, because people like Bullard of the FOMC would like to see at least 100 basis points rate hike by then. Going back to the active trader platform, if I go down to an hourly chart, sort of just drill in a bit closer. Here, I boxed off Friday's price range, so the low here from 82.40 up to 83.60. We were trading within that yesterday, so we had a big drop off on the open on Sunday night. We've recovered all the way up, took out Friday's high, so became more bullish. This morning, we've taken out the highs again, so we're seeing higher highs and higher lows still. Personally, I would like a bit more of a pullback into this middle of this range from yesterday. If we got down to the 83, I think that would be a good psychological number. Also, this rising hourly 200 EMA would also act as dynamic support, and that would give us some room then to come up and attack the sort of 84 level. If we were to rise now, we would probably find some resistance at the 83.60 or 83 spot 694, which then could then bring us back down to the middle of the range. So however way they do it, if we do get a breakout, I want to see a higher high again. So we want to see a breakout above that 83 spot 856, then return towards the 83.80 before a continuation higher. And if we look left, we need to get above the 84 here, and then above the 84 spot 293. And then market structure, if you like, is here around 84 spot 5. Obviously into here would be good if we could get a decent sort of entry back around the 83. That would be good, 250 points at least higher. If we go back to the daily, just to sort of clarify, we are in the middle of a massive range. We've got the price action all the way from, well, August 2021 up to the high here. So everything that's happened since October has been within that range. If you look here, even you pick your ranges, you could be trading this range here from October all the way down to December. Or if you're sort of just trading smaller ranges and you're just more intraday, then you're probably trading between this high from the 5th of January down to the lows of January. What you want to do is see price action get above one of these ranges. So if we get above that 84 spot 293, we're clearing this price action here, and then we're working back into the highs from the 20th of October. So that opens up that high as a possible target. Until then, I'm just targeting the swing highs because that's probably where stops are kept. And you can see here we had a big drop down on the 2nd of November, this balance area here before the breakdown. The lows of this candle here, 2nd of November, is my ultimate target for now. And then we'll reassess where we are. But bullish momentum, bearish retail sentiment, and a decent level to trade off, if we get a pullback to the 83 would be my ideal situation for now. Okay, good luck with it all. Keep your eyes on the news and any scheduled news that's coming out on the economic calendar, and I'll speak to you tomorrow. All right, take care.